Welcome to the first Galileo Capital update of 2024. It's been one heck of a ride, over the last couple of years. I was looking at some stats for what happened in 2023, comparing it to what happened in 2022, and the reason for that is to try and give you some kind of a sense of kind of what's happened over the last couple of years, as a context to what we think might happen in the year ahead. And I think, firstly, always, one of the things we do at Galileo is we try and avoid big predictions. We try and avoid big forecasts, especially when they're extremely optimistic or extremely pessimistic, because the likelihood is that any forecast is going to be wrong. So it's nice to get context, because context helps you understand where you've come from. It gives you an idea of what might happen into the future. And then always we need to be humble enough to say we've got a good idea of what we think is going to happen, but we're not going to bet all our eggs in one basket. And if that view doesn't work out, that you end up then making dramatic losses on your capital. So just for some context, I got some stats on the performance of all the different markets around the world, and maybe starting with South Africa. The top 40 index generated a return of about 6% in last year, and emerging markets as a whole generated a return of 10%. So not a great year for emerging markets, and that was really driven by rising interest rates in America. And just to explain that, when interest rates are going up in the US, what happens is that it becomes like a giant vacuum cleaner, and it draws all the money from markets all around the world into the US, and especially into money market accounts, fixed deposits, and the like in that country. And interest rates in America are now at very, very very elevated levels. I think we haven't seen them raise interest rates as fast as they've done for probably 40, 50 years. And so it was a real dramatic increase in interest rates. And the reason they did that was to combat their big inflation problem that they had in the US, which was echoed in Europe and in the UK. So when interest rates are rising that quickly, what happens is it's generally quite negative for bond markets. It's very negative for stock markets and property markets. And certainly in 2022, that's exactly the context of what happened. Was all of those big asset classes dropped at the same time, and what we saw then was money sucked out of emerging markets especially, but kind of all markets around the world. And so 2023, although there was a nice recovery, especially in the US, the US was up about 25%, and that was kind of mirrored by the world index as well. That wasn't reflected in emerging markets. And so that's one big trend to look out for in 2024 is what happens with interest rates in the US, because if investors start to feel that interest rates will decline somewhere through 2024, we would expect money to start flowing out of the dollar, out of the US, back into other countries, other currencies, and most especially back into emerging markets. So that could be a very positive trend for all emerging markets and also for South Africa. So as I mentioned, the US market was up about 25% last year. The NASDAQ was up 55% last year. The context for the NASDAQ's growth was it recovered after a 33% drop in 2022. So if you had to take your returns from 2022 and 2023, you're only up about 3% over those 2 years, nearly 4%. So although we saw a dramatic recovery in the NASDAQ, which just as a reminder is technology companies, actually not a great year for tech investors over the last 2 years. And a lot of that recovery in the NASDAQ was driven by 7 big tech shares, and the Bloomberg website calls them the Magnificent Seven, and they're the big names that Apple, Microsoft, and Meta, and the like, along with a chip maker called NVIDIA, which has been a huge beneficiary of this big trend in AI. And that's been a big catchphrase for 2023. I can remember having to read furiously over December 2022 when OpenAI launched ChatGPT 3, and trying to understand what this was all about and what kind of an impact it would have on investments, business, and the like. And I think by 12 months later, we're all fairly comfortable that we've got an idea of the power of AI, but I think there's a lot of gross optimism or excess optimism about how much AI is going to change business in the next year. I think AI is going to have a dramatic impact on the way we do business everywhere, but I think it's going to take quite some time for that to really flow into the way that companies work, into the way that valuations of businesses work, etc. So I think early days, the run up in Nvidia's share price based on AI probably overdone, and sort of the optimism around AI and the impact on tech businesses in particular, I think is also overdone. So I'm not convinced that the Magnificent Seven will deliver another 55% in 2024. What one thing is certain around investment markets: whatever happened in the recent past, it doesn't necessarily repeat itself in the near future. So I think we're a bit cautious there. If we look at world government bonds, they had a shocking year in 2022, and so it was right to expect some kind of a recovery from world bonds, and we did see a growth of return of about 4%. But actually, it wasn't much of a price return. In other words, the price of bonds didn't escalate much. What actually happened was it was the interest that those bonds were paying that delivered that 4% return. So if you look at a typical 60% equity, 40% bond balanced portfolio, in last year, it delivered a return of about 17%. This is especially in America. And if you look at the year before, it was down 17%. And that's important to understand, because it was the third worst year in history for a balanced portfolio in America in 2022. So it was likely that there was going to be some kind of a recovery. The bulk of that recovery came from shares and not so much from bonds, because that the price of bonds, as I mentioned, haven't moved much. And so it's the interest that those bonds are paying. So I think if we jump ahead now to looking at 2024, what should we expect? I think we're seeing the kind of gradual ending of the inflation scare in the US. Every month or every quarter, we see new inflation data coming out in the US, and most of it is positive. In other words, most of it is indicating that inflation is coming down. There is one big segment of the basket of goods that gets measured to gauge inflation, and the one basket that's really causing trouble is services inflation. And that's really services jobs. And the reason why services inflation is not coming down is because salaries are still rising in the US. And that's because they're pretty much at full employment. I think in the last quarter of the year, they still have about 8.4 million jobs that are not filled in the US. So what it tells you is that there's still demand for labor, and that means that labor prices can still remain high, and if anything, they can escalate salaries in the US. So to combat those rising salaries, what you are seeing is a fall in oil prices, which has been good for everybody. I filled up my car today, and today is the Wednesday, the 3rd of January, and it's the first day of the new fuel prices, and that was lovely to kind of fill up at a better rate. And we're seeing that across all commodities where commodity prices have come down a bit. So I think just understanding that if inflation comes down, it creates scope for the reserve banks around the world, and especially the Federal Reserve in the US, to consider reducing interest rates. The likelihood is that they don't do that in the first 3 or even 6 months of the year. Possibly they'll do it later in the year. They have been known to surprise us when the data changes. So it could be earlier, but I don't see that. So I think understanding then that falling interest rates will be very positive for global currencies away from the dollar. Falling interest rates will also be very good for share prices, and then especially for bond prices. So we could see the price of bonds going up, which will create more capital growth for investors in balanced portfolios. That's important for our Galileo clients, because a lot of our clients have assets overseas, and a lot of that money is diversified. So I mean, I've noted that our clients haven't done incredibly well in 2022 with a balanced portfolio. There was a decent recovery in 23, but if interest rates come down, then we should see a nice recovery in bond prices, which will help investors for 2024 as well. I think one big theme around the world, and it definitely applies to South Africa, is there will be about 2 billion people around the world voting in a national election in 2024. So a big chunk of the world's population, about a quarter, deciding on new governments. And one big thing about this year is that a lot of those elections aren't going to just be the same as normal. The US, it's extremely undecided as to who will become president there. Donald Trump's facing a huge amount of legal action. At the time of this recording, 2 states have barred him from being on the ballot to be the Republican candidate for president. So he's facing legal challenges there, and then many criminal court cases around fraud around his own Trump organization, and then the insurrection charges that he's facing in the US as well. So if it wasn't for those, the polls are showing that Trump would probably take Biden if the election was tomorrow, but elections are always vulnerable or variable, I should say. And then I think the same for South Africa. The big speculation is what sort of vote the ANC will get. At the time of this recording, reliable polls are showing that the ANC will get anywhere between 45% at the low end up to about 53% at the high end. The polling companies that we like most are showing 45% for the ANC. If that is the election result, and remember, elections can change, dramatically in the weeks leading up to the election. If we get sustained periods of no load shedding or very low load shedding, some good economic recovery somewhere, voters could see the ANC in a better light, and that could change the outcome for the ANC dramatically. But if it does go at 45%, it will be important to see who they choose as their coalition partners. If you listen to Frans Cronje, one of the kind of more well-respected scenario analysts around politics, he's saying that there is a decent chance that the election coalition could be, or the primary coalition could be the ANC and the DA. There are lots of reasons for that. I'm not going to go into those now, but again, just be careful of predictions and forecasts. I know a lot of doomsdayers are saying it's the ANC and EFF, and who knows, it's possible, but there are some very kind of educated pundits out there saying it could be the ANC and the DA. So I think the elections are a big issue for all around the world, for markets in particular, and for us as South Africans. And then I think load shedding, is back and on the agenda. We went through 13 days without load shedding in December, and that was very nice for all of us. We started the year, unfortunately, not with a bang, but in darkness with load shedding reinstated. Let's hope that the private sector power that we are all anticipating kicks in through 2024. If that does happen, the scale of power that's in play at the moment means that we should be at very low stages of load shedding this time in 2025. So if load shedding starts to ease through the second half of this year, and we get more and more power reliability from private sector, I think that's extremely positive for the economy, because this economy is hugely dependent on energy. And then the other big issue is Transnet, and seeing how private sector gets involved in Transnet is also equally important. I think those are the positives. The negatives for now are, NHI is a big concern for everybody. I think, at the time of this recording, the president hasn't signed the NHI bill into law. If he does, and who knows, it's an election year, we don't know what will happen. But if he does, there are lots of court cases lined up, and lots of real money behind those court cases. I know Discovery is very vocal at the moment, saying that it won't pass constitutional muster, the NHI, and so they would expect for the constitutional courts to knock NHI down. So I think for now, it's something we are watching. We are worried about if it did actually proceed as it is in its current format. We tend to believe that the lawyers in this instance, and that the NHI bill is not workable in its current form. And so for now, we keep watching. We're not panicking, and certainly we are vocal where we can be around making sure that people understand the bill in its current form doesn't work. That's not to say that we're opposed to universal healthcare. The medical aid system in South Africa is already broken. Many of our clients who are retired for quite some time will tell you that their medical aid rates are a huge proportion of their monthly costs, and it's escalating far faster than other parts of their living costs. So we need to find a solution for everybody, but the current form of NHI is not the solution. For the rest, we want to wish you a very happy 2024. We are very comfortable that our investment portfolios are well positioned. We're certainly not overexposed to tech shares, that are running at very high valuations. We think a lot of money will flow into the more kind of value-oriented part of the markets, both in South Africa and globally. And certainly, we've always had a bias to value in our portfolios. And so we're more comfortable now than we have been for quite some time. Valuations of the JSE are incredibly good. I think the price earnings ratio of the JSE is around 8, and that's very rewarding for investors usually if you look 5 years out. So I think just in summary, the politics are going to be scary. The politicians will say lots of stupid things leading up to the election. That's what they have to do, they feel, to win an election. We're not going to take it all seriously. I think, what is said and what is done is always different. And we will watch the American election with interest. But really what we'll be focusing on is inflation in America. And, when that really kind of goes down on a sustained basis, we think that's a massive tidal wave that will lift investment markets around the world, including South Africa and including the Rand. We'll be in touch again in 2024 in February, and thanks so much for your patience around the bad times of 22 and then the fairly decent times globally around 23, and I guess muted returns in South Africa. All the best for the year ahead.